It's a whirlwind out there in the crypto space, isn't it? Just constant information, new stuff popping up seemingly every day.
Uh-huh,
And
absolutely.
you're probably trying to, cut through all that noise, figure out what's really going to matter for the next, say, 5 years.
Right. Between now and 2030.
Exactly. What's going to shape things. And that's what we're diving into today.
Yeah, forget the surface level headlines. This is more of a focused look. We're pulling key stuff directly from our analysis of preparing for the crypto future, 2025, 2030.
Right.
The goal is really to pull out those crucial insights, about where crypto's heading over this period. Get past the hype.
Drill down into the big shifts: finance, tech, regulation.
And yeah, the opportunities you need to know about. Provide some clarity.
Absolutely. And the source material, it covers a lot. We're talking adoption trends, AI's growing role,
Regulation battles, tokenization, that's a huge one.
smart contracts getting smarter, decentralized AI, digital identity evolving.
Gaming, security, privacy, always critical. And even, the big picture geopolitics stuff.
So it's comprehensive. Let's jump right in. How are the actual foundations of finance possibly changing?
Well, the first thing that jumps out is this kind of fundamental tension. You've got the traditional financial system.
Yeah, dealing with inflation, debt, central bank policies,
Mhm.
the usual suspects.
Exactly. And then you have this expanding universe of decentralized digital assets, Bitcoin, Ethereum, and the like.
And the report calls this a battle for financial freedom.
It does, and I think that captures it pretty well. On one side, governments are seriously looking at CBDCs, central bank digital currencies.
Right, more control.
Potentially, yes.
Yeah.
And on the other side, you have the promise of these decentralized options gaining more ground. How this plays out, it's going to redefine value, how we interact with it.
And that ties into mass adoption, right? The report predicts it'll be pretty common by 2030.
Yeah, quite significant. Not just, more people holding crypto. It's about it getting woven into everyday stuff.
Like corporations using blockchain for payments, governments tokenizing assets.
Exactly. It paints this picture where interacting with crypto might become almost invisible, just part of the background plumbing of the economy.
Okay, but here's the catch you mentioned before we started.
Right. A really crucial distinction. The report is clear. Adoption doesn't mean decentralization.
Yeah. That's vital for you listening to grasp.
Totally. Just because crypto tech is being used widely doesn't mean it's truly decentralized. Control could still sit with big, centralized players.
So you might be using crypto, but it's not giving you that financial freedom aspect.
Precisely. To really get the benefits like, more autonomy, less censorship, you have to understand what true decentralization looks like and actively seek those options out.
Otherwise, it's just old wine in new bottles, maybe.
Could be a new system with some of the same old limitations.
Okay, important nuance there. Now, let's talk about something that sounds pretty futuristic. Web3 meeting AI.
Yeah, this convergence. The report sees AI-powered blockchain apps really shaking things up across industries.
Finance, healthcare, entertainment.
Gaming, too. It makes sense if you think about automation and efficiency. AI brings the smarts, blockchain brings the trust and structure.
And the report asks, are you ready for an AI-powered DeFi revolution? That sounds big.
It really highlights the potential disruption. Imagine DeFi protocols, where AI optimizes trading, manages lending markets almost on its own.
Creating totally new financial tools, maybe?
Potentially, with efficiency we haven't seen before. It's a fascinating prospect.
But all this cool tech stuff is happening inside this messy regulatory picture, isn't it? The report calls it a chess game.
Absolutely critical, this regulatory piece.
Yeah.
And something you really need to watch. Governments are all over the map.
Some embracing it, others clamping down.
Exactly. You see frameworks being built to encourage innovation in some places and, well, much more restrictive approaches elsewhere.
And these regulatory fights over the next 5 years, they'll basically decide crypto's future.
In many ways, yes. Will it be a tool for individual financial sovereignty or something more controlled, more centralized under government watch? That's the high-stakes game being played right now.
Okay, so we've sketched out the changing landscape. Now, the part lots of you are probably leaning in for, where are the opportunities in all this?
Right, the actionable stuff. How can you, the listener, maybe position yourself to benefit? The report shifts gears here.
Focusing on high growth potential.
Yeah. The core idea it puts forward is finding projects with solid fundamentals, real use cases,
Yeah.
before they hit the mainstream, before the big price jumps.
And it points to a few specific areas, right? Decentralized AI, tokenized real-world assets, privacy chains,
Yeah.
calls them potentially explosive.
Mm-hmm. And there's a logic to it. Decentralized AI tries to fix the transparency issues of big tech AI. Open up the black box,
Make it fairer.
hopefully more aligned with users, than tokenizing real-world stuff, real estate, art, commodities that opens up markets, makes things liquid, lets you own a fraction.
Stuff that was hard to invest in before.
That's exactly. And privacy. Well, with everyone worried about surveillance, the demand for tech that protects your data, that's only going up.
So getting in early, understanding these areas, that could be key.
It could offer a significant edge, yeah.
Now, Ethereum's obviously huge, but the report talks a lot about layer twos, Optimism, Arbitrum, ZK Sync. What's the big deal there for someone not super technical?
Okay, think of Ethereum like a really busy main road. Lots of traffic, gets jammed up.
Yeah, high fees, slow sometimes.
Right. Layer 2s are like adding super fast express lanes next to it. They bundle up transactions off the main chain.
And then settle them back later.
Sort of. They process a lot off-chain, then post a summary back to Ethereum. The result?
Yep.
Much faster speeds, much lower fees.
Making apps actually usable for lots of people.
That's the goal. Crucial for scaling up, handling more users. They all work slightly differently, but that's the basic idea. Make Ethereum scale.
Okay, makes sense. And it's not just what to invest in, but how, right? AI is changing the investment game itself.
Definitely. AI in crypto investing isn't sci-fi anymore. It's happening.
Algorithms for trading, analyzing all that on-chain data.
Exactly. Portfolio management, too.
Yeah.
The report suggests future success will mean using these AI tools, making data-driven decisions.
Augmenting your own research, not replacing it entirely.
Ideally, yes. Combining human insight with machine speed and power.
And DeFi, it had its boom and bust. What's the next evolution look like?
Yeah, DeFi isn't standing still. It's learning, adapting. The next phase, probably more focus on cross-chain stuff, moving assets easily between blockchains.
Right.
More AI integration, too, for smarter lending, better risk management, and finding ways to earn yield that are, well, more sustainable, less risky than some of the crazy stuff we saw before.
So, same DeFi principles, but more grown-up tools.
Kinda, yeah. More advanced, more interoperable, different from the last boom.
So if you're listening and want to spot these potential hidden gems, what's the practical advice? How do you research effectively?
It's about being proactive, looking at multiple angles. Watch for new narratives, trends just starting to bubble up.
Follow the developers. See what they're actually building.
It's a huge one. Track developer activity. Pay close attention to regulatory shifts. Clarity or crackdowns can make or break a project.
And watch where the big money, the institutions, might be sniffing around.
Yeah, institutional interest can be a validator. It's about getting in early, doing your homework, and connecting those dots.
Okay, opportunities covered. Now let's flip the coin. We need to talk threats, challenges. The report highlights some serious ones.
Absolutely crucial. Big potential rewards always come with big potential risks. And a major one is this ongoing tension. Governments versus decentralization.
We mentioned CBDCs earlier, but the report really leans into the risk of governments using them to tighten control, right? Cracking down on privacy coins, self-custody.
It's a direct clash, isn't it? Crypto's promise, for many, is freedom, autonomy. Governments naturally want oversight, control for policy, security, law enforcement.
So the advice is...
Educate yourself. Learn about non-KYC DeFi options, privacy tools. Understand how to navigate this potentially tightening environment.
And the scams, they're not going away, are they? Probably just getting sneakier.
Unfortunately, yeah. More money, more users means more scammers. And they get smarter. Fake tokens, complex smart contract exploits, deep fake phishing. So rigorous due diligence is non-negotiable. Check the team, the tokenomics, the actual utility. Use on-chain tools to verify things before you commit funds.
Basic safety first.
Always.
Now, AI, we said it's an opportunity, but also a threat, a double-edged sword.
Yeah, that's a great way to put it. AI can boost analysis, but it can also power manipulation. High-frequency trading bots causing chaos.
Flash crashes.
Could happen. And deepfakes.
Right.
Imagine AI creating fake videos of project leads saying things they never said, spreading FUD or bumping scams.
So the advice is use AI, but don't blindly trust it.
Exactly. And embrace it cautiously. Build your own knowledge base. Critical thinking is still your best defense.
Then there's the worry about Wall Street, basically. Big institutions coming in and maybe rigging the game, influencing regulations to favor themselves.
It's a valid concern. As big players enter, they bring lobbying power. They could push for rules that favor centralized exchanges, tokenized securities they control.
Squeezing out the smaller guys, making true decentralization harder.
Potentially. It could marginalize smaller projects, individual investors. This is a suggestion. Diversify. Don't put all your eggs in institutionally favored baskets. Support truly decentralized platforms.
And finally, the unavoidable truth. Markets crash, economies wobble, geopolitics gets messy. How does that factor in?
Crypto isn't immune. Downturns, black swan events, global tensions, they all hit crypto, often hard.
So prepare for volatility.
Absolutely. Build a balanced portfolio that fits your risk tolerance, keep some cash aside maybe for buying dips, and just stay adaptable, aware of the bigger economic picture.
Right. Okay, we've covered the landscape, opportunities, threats. Let's switch gears to something the report calls really transformative. Tokenization. Break that down for us. What is it? Simply.
Simplest terms. Taking ownership rights to an asset could be real estate, gold, art, even future income.
Tangible or intangible?
Right, and converting those rights into digital tokens on a blockchain
Why is that such a big deal?
because it makes things tradable, divisible, accessible. Assets that used to be illiquid, hard to split up,
Right.
suddenly you can trade them easily, own tiny fractions.
Like owning 0.01% of an office building. Or trading tokenized gold instantly.
Exactly. That's the power. It opens up investment to way more people and makes markets more efficient.
And the report points to specific areas where this is going to be huge. Real estate, for one.
Yeah, the traditional real estate process is slow, expensive, not very liquid. Tokenization could change that completely. Fractional ownership, instant deals via smart contracts.
Democratizing real estate investing.
That's the idea. A much broader pool of people could participate.
And it mentions stocks and equities moving on to the blockchain, too. That sounds massive for traditional finance.
Huge potential shift. Imagine major institutions tokenizing stocks. Settlements could become way faster, costs could drop.
And maybe even new decentralized stock markets popping up.
Could happen, challenging the old exchanges like NYSE or NASDAQ.
And it's not just financial assets. Commodities, too. Gold, oil.
Correct. Trading tokenized gold, silver, oil, even crops.
Mm.
It improves liquidity, cuts down on storage and transport hassle, makes it easier for more people to get exposure.
Okay, and even intellectual property, like music rights, patents. That's wild.
Super interesting, right? Imagine creators, musicians, writers, inventors tokenizing their work.
Selling directly to their fans or users, cutting out the middleman.
Exactly. No need for publishers or labels taking a huge cut. A much more direct, potentially fairer system for creators.
So, bottom line, understanding tokenization early gives you an edge.
That's a key takeaway. This is likely going to reshape how we invest in almost everything. Getting your head around it now puts you ahead of the curve compared to purely traditional investors.
All right, driving a lot of this tokenization and automation, smart contracts, we hear the term all the time. What's the next evolution there?
Okay, so basic smart contracts are self-executing agreements, code on a blockchain, automating stuff, cutting out intermediaries.
We get that part.
Right. But they're evolving, becoming more autonomous, like digital entities that could run complex processes, maybe even entire decentralized businesses on their own.
So DeFi platforms running themselves almost entirely. Less human input needed.
That's the vision, yeah. Fully automated lending, trading, liquidity management. The report even hints at AI-powered smart contracts.
AI adjusting interest rates automatically based on a market.
Exactly. Optimizing things in real time, taking automation to a whole new level.
And this isn't just finance, right? It's supply chains, too.
Big potential there. Imagine tracking a product's entire journey on a blockchain. Smart contracts trigger the next step automatically when one is done.
Reducing fraud, making things traceable, speeding up global trade.
Precisely. Cutting out manual checks, paperwork, making things faster, more transparent.
And DAOs, decentralized autonomous organizations. Smart contracts are the engine for those, right?
Totally. DAOs run on rules coded into smart contracts. Decisions get made by token holders voting. As smart contracts get more sophisticated, DAOs can handle more complex stuff, coordinating large groups without bosses.
Interesting. And for creators, again, protecting IP.
Yes, smart contracts can define licensing terms, track usage automatically, ensure creators get paid directly and transparently. Much better than relying on old-school publishers or distributors, maybe.
And the synergy you mentioned, AI and smart contracts working together, paint that picture.
Think of AI doing the analysis, making decisions based on real-world data, and then triggering the smart contract to execute automatically.
Like an insurance contract adjusting payouts based on AI analyzing weather data.
Exactly. Or a financial agreement, optimizing terms based on AI spotting market shifts. Dynamic, responsive agreements.
Okay, that leads perfectly into the next big topic. Decentralized AI. Why do we need AI on the blockchain? What's wrong with the AI we have now from big tech?
Well, the report argues centralized AI, while powerful, often lacks transparency. The algorithms can be black boxes, potentially biased.
You don't know how they're making decisions.
Right. Decentralized AI built on blockchain aims for open source algorithms, fairer governance, maybe more censorship resistance. The idea is more trustworthy, accountable AI that benefits users, not just the corporations controlling it.
And how does this decentralized AI change crypto and Web3? You mentioned AL trading platforms earlier.
Yeah, imagine decentralized AI algorithms analyzing on-chain data, making predictive trades autonomously. That could lead to AI-driven DeFi protocols.
Optimizing yield farming automatically, managing risk.
Exactly. Even fully autonomous investment strategies running on-chain.
So the smart contracts themselves get smarter with AI.
That's the idea of AI-native smart contracts. They're not static code. They can adjust terms dynamically based on AI analyzing market conditions, external data, much more flexible.
And beyond finance, how does decentralized AI affect other Web3 apps? Social media, marketplaces, gaming.
It could make them way more personalized and adaptive. Imagine decentralized AI curating your social feed based on your interests, not some corporate agenda.
Marketplaces with dynamic pricing based on real demand.
Yeah, or games with AI characters that actually learn and adapt to how you play.
And a report suggests this could actually challenge the Googles and Metas of the AI world.
That's the hope, the potential. Open source models on decentralized networks offer an alternative. More data control for users, fairer algorithms. It's a big goal, but the potential is there.
And finally, AI helping with security within crypto.
Definitely. AI can monitor blockchain activity 24/7, spot weird patterns that might be fraud, identify vulnerabilities in smart contracts before they get hacked, like an intelligent security system for the decentralized world.
Makes sense. Okay, shifting focus again to something really personal. Digital identity. What's the problem with how we handle identity online now?
The main issue is it's centralized and fragmented. Your data is scattered across platforms controlled by companies. That makes us vulnerable.
Data breaches, censorship, our data being sold.
Exactly. We don't really own or control our online identity.
So the solution is decentralized identities or DIDs. How do they fix it?
DIDs flip the model. You own and control your identity data. You hold the keys. You decide who sees what. It prevents tracking, exploitation. It's self-sovereign.
Self-sovereign identity, SSI. That's going to change how we log in to things in Web3.
Yeah, forget passwords. With SSI, you'll use your private key to generate a cryptographic proof. Proves it's you without giving away unnecessary data. More secure, you're in control.
And beyond logins, this idea of blockchain-based reputation.
Interesting concept. Instead of trusting corporate ratings, your reputation could be built on verifiable interactions on the blockchain, a more objective, decentralized way to establish trust.
Could AI help secure these DIDs?
For sure, AI could spot fraudulent identity attempts, verify credentials faster, monitor for suspicious activity, make the whole system more robust and user-friendly.
And the report even talks about blockchain digital passports for travel.
Imagine a secure, tamper-proof digital passport you control. Streamlines travel, instant verification at borders, but you share less data. Faster, more private, potentially safer than current systems.
Okay, let's dive into gaming and the metaverse next. The report says play to earn, P2E is evolving, right? Moving beyond the initial hype.
Yeah, P2E 1.0 often had shaky economics, focused too much on just earning, not fun.
Yeah.
P2E 2.0, as the report calls it, is about skill-based games, sustainable economies.
Where in-game assets have real long-term value, and players are rewarded for skill and contribution.
Exactly. More like real economies, less like speculative bubbles.
And digital ownership is key in these metaverses. Virtual land, NFTs.
Absolutely foundational. Owning, developing, monetizing virtual land and unique NFT assets. That's creating whole new investment opportunities, mirroring the real world in some ways.
And the idea that these NFTs could work across different games. Interoperability.
That's a huge potential leap. Imagine your items, your character's gear, maybe even currency, moving seamlessly between different virtual worlds, blurring the lines.
True ownership that travels with you.
Precisely. A much richer, interconnected digital existence.
And AI gets involved here too, helping build these worlds.
Yeah, AI tools could let players design their own virtual spaces, automate NPC behavior, even generate unique content, making metaverses more dynamic, user-created.
And governance shifting too, away from companies towards players using DAOs.
That's a big trend. Instead of corporate control, game economies governed by the players themselves through token voting. more community-driven, potentially fairer.
And players doing DeFi stuff inside the game, staking, lending, gaming tokens.
We might see that by 2030. Sophisticated in-game economies where you can stake tokens for rewards, lend assets, yield farm, blurring the lines between gaming and finance.
Wow. Okay, with all this value flying around digitally, security and privacy become even more critical. The report warns about blockchain surveillance increasing.
Definitely. As more activity moves on-chain, governments and corporations are investing heavily in tools to track it. It's a real threat to financial privacy.
Which makes privacy coins more important.
Logically, yes. As surveillance grows, demand for ways to transact more anonymously will likely increase. Privacy tech becomes a crucial tool for those who value it.
And the report hammers home the need for self-custody again, holding your own keys.
Non-negotiable if you want true ownership and freedom from KYSAML on exchanges. Centralized exchanges are convenient, but you're trusting them with your assets. Self-custody means you are in control.
But that comes with responsibility, right? Protecting yourself from DeFi hacks, NFT exploits.
Absolutely. The space is still risky. You have to do your homework. Check security audits, use multi-sig wallets for large amounts, manage risk carefully when interacting with new protocols. It's essential.
And for general online privacy, beyond crypto, decentralized VPNs, encrypted messaging.
Yeah, traditional VPNs still rely on central servers. Decentralized alternatives built on blockchain offer potentially better privacy and security, part of a broader toolkit for protecting yourself online in Web3.
Can AI help with security here too?
Yes, AI can be a powerful ally, detecting fraud patterns, blocking phishing, protecting wallets. Autonomous AI constantly monitoring for threats provides another layer of defense.
And protecting identity specifically, zero-knowledge proofs, ZKPs. Explain those again briefly.
Okay, ZKPs are crypto magic. They let you prove something is true without revealing the underlying information.
So I can prove I'm over 18 without showing my birth date.
Exactly. Powerful for private authentication, protecting data on-chain, verify credentials without exposing sensitive details. Huge for privacy.
Okay, final section. Let's zoom out to the big picture. Geopolitics, economics. How do these macro shifts affect crypto's next 5 years? The report mentions a possible digital currency war.
Right, the race for CBDCs is heating up globally. Governments want digital fiat they control. This could lead to more competition with the decentralized crypto, maybe more regulation or restrictions in some places.
So diversifying into decentralized assets is a hedge.
That's the suggestion. Don't rely solely on what governments might issue or control.
And inflation, debt, those classic economic worries. How do they push crypto adoption?
When people lose faith in traditional money or systems, they look for alternatives. Gold has been the classic hard asset hedge. Bitcoin and some other cryptos are increasingly seen in that light.
A potential store of value against inflation.
Potentially, yes. So current economic instability could actually drive more people towards crypto, especially Bitcoin and stable decentralized assets.
Interesting. And the BRICS nations, Brazil, Russia, India, China, South Africa, and others joining, they're exploring crypto for trade.
They're looking for alternatives to the US dollar system.
Yeah.
Using crypto or blockchain for trade settlements, new financial alliances, that's a potentially massive shift in global finance. Watching that space is important.
And AI's role in finance intersects with all this.
Yeah, AI is changing investment everywhere. Institutions are using it heavily. Individuals need to get familiar with AI tools too to stay competitive. But again,
Self-custody remains key. Don't just hand it all over to an AI-powered institution.
exactly, maintain control of your actual assets.
And finally, decentralized governance, DAOs, growing, and just needing to handle market swings.
Right, DAOs are becoming more common as governance models, worth exploring participation. And yes, markets will be volatile, especially with global uncertainty.
Yeah.
Risk management, understanding macro trends, absolutely essential for navigating crypto.
Okay, so wrapping this deep dive up, the message seems pretty clear. The next 5 years, 2025 to 2030, huge changes coming in crypto.
Truly transformative across finance, tech, geopolitics, big opportunities, but also real risks.
And it really comes down to preparation, doesn't it? What you, the listener, do now will shape how you navigate this.
Absolutely. Your commitment to learning, adapting, understanding these trends, that's what will make the difference.
It makes you think, you know? Which of these areas really jumps out at you? Is it the potential of decentralized AI? The tokenization wave? The need for better security?
Yeah. Find what resonates most.
And start digging deeper there. We hope this gave you a solid map to start your own exploration into crypto's future.
And just remember, it's an ongoing journey. Keep learning, keep thinking critically. The landscape will keep evolving, even beyond 2030. Stay adaptable.